Hey everyone, hope everything is going well. I'm over at Twitter and I've been looking at a lot of technicians because I am a fundamental guy, okay? I look at fundamental analysis, as most of you know, but I do cover technicals because I do believe that the technicals and fundamentals tell a good story and you could interpret similarities in what good technicians and what good fundamental guys are saying. My bar chart, market breadth deteriorating once again with 46% of the S&P 500 stocks trading above their 100-day moving average, yet this S&P or SPX sitting at all-time highs. Yes, that's an issue. Okay. And I want to go to the S&P 500 weighting again. I looked at the top 10 companies based on the portfolio allocation. And I did the math, and it's approximately 32%, roughly a third of the market action in the S&P 500 is composed of the top 10 stocks. And you have to remember, it's 500 of them in there, okay? So as long as the Microsoft, the NVIDIA's, and the Apple had a down day on Friday, but Apple had a very strong week, last 2 weeks. And I was the beneficiary of that. Now, will that trend continue in Apple? We shall see. But 20 some percent, if 20 some percent of the stocks, or and let me rephrase this, if 32% of the action is based on strong stocks, what's going to happen to the market short term? It's going to go up. But what about the rest? So stock picking is very, very crucial during this environment where I do believe we'll make all-time highs, even more than what we're seeing, but I don't want to be aggressively long. I'm mainly in a conservative based portfolio with mainly long bonds. Now, yeah, I do have the index, like option position in that. I do have Bitcoin exposure, gold exposure. Yeah, and I think I do have an Apple position right now, but it's not as aggressive as I was maybe a couple months ago. And I liquidated one of my portfolio with stocks, and I've transferred to once again a conservative based portfolio. Anyways, let's look at some more information here. JC Peretz, fresh 6 week lows today for the NYSE advanced decline line. Fresh 6 week 6 month lows for the Nasdaq advanced decline line. Meanwhile, both the S&P ETF and the Nasdaq ETF closed at all-time highs today. Have a great weekend. That's a divergence if it continues. JC Perret says, you just saw the highest weekly close for the S&P 500 in history. Do you know how many stocks on the NYSE closed at 52-week high today? 12. He's talking about stocks, not talking about ETFs, okay? And there's what, over 1,000 stocks in that NYSE? Dude, that's not good. You want to see more highs. And you just can't have, once again, the top dogs pull the market, because what happens when those stocks roll over? What happens if those earnings cannot um, replicate the success that they've had? The consumer is not getting stronger, it's getting weaker. So that's something to note. Helen Meisler, uh, good technician, she wrote this. And let's take a look. Another divergence stats from Jonathan Krinsky, with the other time being 1999. There are no shortage of stats to express how lopsided this market is right now, but we will throw out another one. As of 11 a.m. Eastern, this was a couple of days ago, SPX was 4% above its 50-day moving average, yet just 43% of the components were just above their 50-day moving averages. Since 1990, there have been 1,392 days when SPX was at least 4% above its 50-day moving average. The 33% reading of stocks above the 50-day moving average would be sixth lowest of all those readings. The only weaker ones came in December 1999, a few months before the tech bubble top. In fact, the only time since 1990 when SPX was 4% above or more above its 50-day moving average with less than 50% of the components above their 50-day moving average came in 1999 and yesterday and today. Another red flag. Okay. And I think there is Tom McLennan. Let's look at this guy here. He had some interesting stats too. I want to go to his Twitter. No, no, it's somewhere. He did talk about it in one of his article. He talked about this. McClellan oscillator is a very short-term accelerometer for the AD data. The companion summation index changes each day by the value of the oscillator. So the summation is moving down now while prices move up, which is highly irregular and a sign of trouble. Okay, this is the NASDAQ. All right. And this is what he also said. By my count today, only 30 NASDAQ components were higher on June 13th, despite all-time new highs for the index. That keeps the McClellan AD oscillator for those stocks below zero, not the condition you want to see if you are in the bullish camp. And this is what Jason Gofert said. I think he runs Sentiment Trader. To the best of my data, this is the first time since inception that NASDAQ 100 rose more than 0.5% and at least 40 more stocks declined in advance. Red flag. Okay. These are not tinfoil hat people out there. Okay. And yes, if you have NVIDIA, if you have Apple, Microsoft doing well, the indexes are going to do well. But what I want to see to prove myself wrong that I think the economy is not in good shape. For me to change my mind on that, I would have to see from a technical point of view, a lot of stocks starting to do well, and they're not. It's only the big boys that are usually the ones carrying the rest of the team. And we can't have that. We cannot have that. And ultimately, yeah, price action depends on what, 10 stocks here for the indexes. But bad earnings, like I've said, things coming down, in my opinion. Not telling you what to do, not telling you to put on short positions or whatever, but so what I'm thinking back in my head, it's like, okay, if this continues, I want to start looking at more short positions. I have one in the Russell 2000, right? And I have a long-term horizon for that, but it's not looking good right now, even though the markets could rip higher. Anyways, let me know your thoughts. I'll talk to you later. See you. Bye.